guys, Matt Sauer here again with Different Mortgage. Today I want to talk about a question I get all the time, which is how much money can I borrow to buy a home? I did a previous one on looking at the difference between how much can you get pre-approved for versus what should I get pre-qualified pre-approved for my budget. So please be sure to check that out. But today we're going to talk about how much you can borrow and how is that determined. So before I get started, there is some caveats. There always is, right? I mean, nothing's black and white. If you have a VA loan, there's always some loans where some of these things may not apply because they can get qualified to higher debt ratios and stuff like that. But again, I just want to go over the big broad stroke way you can know how much you can borrow to buy a home. So there's three major things that lenders look at when you're buying a home. There's your credit score, there is your debt ratio, and then there is something called loan to value, which is basically how much of a down payment you're putting. So basically, how much are you borrowing versus what the asset price is of a house. So for instance, if it's a $100,000 house and you're gonna put down 20%, you're borrowing 80%. If you're gonna put down 5%, then you're borrowing 95%. So again, it's those three things. It's credit score, debt ratio, which we'll get into in a second, and then down payment. So let's look at the debt ratio. So it's debt to income ratio. Basically what lenders do with that is they're gonna look at how much do you make, your gross monthly. So not before you get your taxes or anything like that taken out. So you wanna look at your gross monthly. And then they will lend at usually up to 50% of that. So let's say someone makes $10,000 a month in income gross, they will lend $5,000. That includes all debts that show up on your credit report. So let's say $5,000, you got a car payment for $500. That means the most you could qualify for is $4,500 a month on a mortgage payment. So some things to keep in mind, that includes the principal and interest payment, the taxes, and the insurance. So it's super important. Sometimes you go on Zillow or Redfin or one of those and they show the ballpark payment. You got to make sure they're estimating taxes and insurance correctly, or they even have them in there. Because I've had people come in thinking they can qualify at a higher price point than they really can when they look at all those figures. So the debt ratio in general is 50%. There's some down payment assistance programs where you can do 0% down, and then that could drop down to like 43%. So it is like not always hard and fast rule, but that's a good general ballpark to consider. Your debt ratio. Credit score, we breezed through that earlier. That's pretty straightforward. Usually, the higher the credit score, there's different options you can do. Lower the credit score might put you in a different camp. Like a lot of people may want to consider FHA. Down payment on that is 3.5% down. Conventional, you can get away with 5% down. And then we have programs where you can get down payment assistance with 0% down. VA loans, they can get away with 0% down. Down payment assistance, 0% down. The only thing with those, usually the debt ratio comes down, so you got to make sure on those you can get to about 43%. Again, those are a few of the things to look at: credit score, debt ratio, and then like we talked about, down payment. Those three together are going to basically create the picture of like, hey, this is the max I can do. Now, just because you can do that doesn't necessarily mean you should do that. So you got to again look at my previous video talking about, hey, thinking through the future plans for your situation specifically and trying to, determine what's the best strategy to go with. So again, I know all the products, been doing this for 20 years. Probably the best thing is just set an appointment with someone like me, a mortgage advisor, so we can go through your options, give you a ballpark on all the programs, and then help you just think through things you may not even be thinking about.